Hi, everyone. This is Jason Burek of Wall Street for Main Street and managing editor of The News Doctors and independent financial journalist, Eric Dubin. Welcome back to episode number 15 of the Welcome to Dystopia podcast. Eric, thanks for joining me.
Glad to be here.
Now, Eric, there's so many different current events going on in the world. The News Doctors had a lot of interesting stories that I want to talk about in this week's episode. The first one, and, it's kind of slowed down the stock market crash, is Japan negative rates, because we've seen, the Japanese want to devalue the yen. Maybe it's not dropping fast enough for their liking. It didn't drop that much in 2015. And then, as you know, we've heard Turt Ferguson at TF Metals report say that the yen is correlated with the U.S. stock market rising. Why do you think then Japan is going to negative interest rates?
Well, it's desperation. We basically have seen Japan in a deflationary funk for 2 decades. And they've had periodic efforts of trying to reboot their economy with huge infrastructure spends from the fiscal side to negative interest rates and outright asset purchases where, the central bank is essentially creating credit that goes into sovereign wealth purchases of Japanese equities and other assets. Many times over the last couple of years, the Bank of Japan has literally been, on a net basis, the purchaser of 100% of the issuance of new bonds from Japan. It's just that crazy, and none of it's working. Every once in a while, you might get a little bit of a blip on the EKG monitor of the Japanese economy, and everybody gets excited, and we've seen the cycle repeat over and over for the last 2 decades, and now, ever since we have, been in this global deflationary crash that was attempted to have been resuscitated by all of the machinations of the central bankers around the world since 2008, it's all the worse for Japan. Now the major economies around the world are essentially in the same position. So I don't think there's really any way out of this mess. It all gets back to kind of like what was the alarm being sounded by William White, the former chief economist for the Bank of International Settlements, the central bank of central bankers. And when a central banker uses the word jubilee, you know that there's problems. When's the last time you heard a banker talk about, jubilee? So
not in my lifetime.
Yeah, not in anyone's lifetime in the last 100 years, probably. With the exception of what happened in the period of the Great Depression, and they certainly weren't thinking along those lines back in 2008. Basically, the hubris of policymakers and the oligarchs that have the leashes attached to those policymakers' necks all assumed as operating assumptions that just the wealth effect and financial repression and giant liquidity and on would reflate the financial system and save the real economy in turn. And that's a recipe for complete idiocy and disaster, because it just will never work.
Eric, I think this is the end game, or we're very close now to the end game of Keynesian economics. They seem to me, the central bankers, the Keynesian academics, the neo-Keynesians, the guys like Paul Krugman, the politicians who love Keynesian economics because, they can spend more money that they don't have and they don't have to pay for it immediately. They're running out of schemes. And, now that Japan has done negative rates, we've seen Europe try them to a smaller extent. I think Germany has done them. People can look on Zero Hedge, and there's other European countries talking about them too. We saw an article on Mises.com. We can put it in the text box later. The Federal Reserve has talked about it in the past. I know Janet Yellen has talked about negative interest rates too. But now that Japan is doing it, the U.S. Federal Reserve is also talking about doing it. At least some of the economists are. And it's really just amazing that they want to keep doing this. And I think for our listeners out there, we were talking about this before we started recording. This goes back to the origins of Keynesian economics and the origins of Marxism. And let me explain that just a little bit. I'll give a brief summary of it. First, there's a very interesting book recommendation for our listeners out there. The guy's name is Detlef Schlichter. He's German. He's lived in London and in New York in the United States. He worked as an investment analyst, a credit analyst, a money manager, hedge fund manager. He wrote an author book. He's an Austrian school economist by hard work on his own, but he didn't get paid for it. So he worked on Wall Street for over a decade, and afterwards he studied Austrian school economics, after work. because, if he brought it up at work, he would be made fun of. But he wrote this very great book called Paper Money Collapse a few years ago. It's available on Audible book and Audible audiobook and also on Amazon. And in there, he talks about this, how, the final conclusion to paper money collapse, how no central banker would want a strong currency, everyone wants a weaker currency due to mercantilism and stuff, is because of Marx's labor theory of value and the savings glut. So Marx basically talked about how this savings glut was what was preventing the economy from being strong. You were evil if you were a saver. You were evil if you made a profit. You were an evil, greedy hoarder for saving any money and making a profit and things like that. You were preventing the working class, the workers, the proletariat from getting higher wages, from prices going up. So more goods could be sold and the workers' wages could be raised and things like that. So Marx's view was that, labor's wages had to continually rise, and Keynes, to a very large extent, basically copied a lot of this from Marx directly with his savings glut hypothesis. So, this is why central banks, to me, Eric, they're trying to penalize savers is, they think from, and this derives from Marx, that, they have to have wages higher, they have to have prices higher, and they have to force those evil, greedy savers, those hoarders, to start spending their money one way or another. And that's why they're trying to tax people, in their checking accounts and things like that now.
Yeah, and to Keynes' credit, I think he understood this a little bit better than what a pure Austrian critique of Keynes' work would suggest. But, the reality today, the bottom line is that the policymakers controlling the levers of the United States and other major economies all subscribe to this stuff. And, it's not even an academic issue. We can see in the day-to-day headlines constant stories about people like Greenspan and Bernanke and so forth talking about the quote-unquote savings glut.
Exactly. So, this is thought of as, it's uncontested economics,
yep.
But here we have Austrian school economics and it's not even taught anywhere. But obviously, this is going to end badly. But the main point here, Eric, that I think I want our listeners to understand the most is no central banker wants a strong currency. So a strong U.S. dollar, the stronger the U.S. dollar gets, and we talked about this off the air, I think a couple of days ago, you're talking about the dollar index and how the Federal Reserve watches it. So, if the dollar index continues to strengthen, where the other currencies fall, I don't really see, or at least you said you don't think they're going to want to raise interest rates on.
Yeah, basically what that this problem is, and why the Fed is pushed up against the wall when it comes to the currency box that they're in, is that we are seeing a problem with the deflationary crash in the credit markets and the shadow banking markets. And the rising dollar is one of the principal reasons that are exacerbating the problem. The third world debt, in terms of dollar-denominated debt, becomes more difficult to service when the dollar rises. And when oil companies are suffering because the dollar's rising, pushing prices of petroleum down, the service of the overhang of the huge amount, hundreds and hundreds of billions of dollars of impaired shale sector debt within the United States, in turn wreaking havoc in the United States economy. And then globally, financially, you can see the same kind of transmission mechanisms operating, for example, in the case of Deutsche Bank, who's a major creditor on the other side of the position of Glencore and their impaired debt in the commodity sector, getting completely shellacked by the exact same deflationary cycles that are exacerbated by a rising dollar. So it's very clear, and in particular when you look at the way, when you juxtapose the jawboning and management of perspective economics discussions that the central bankers, the Federal Reserve Board governors would come out in the media all the time and whatnot. And if you look at what they were saying throughout the course of 2015 and juxtapose that with trends in where, the dollar was going or other currencies, and you spoke about Craig Hemke's fine analysis about the Japanese yen being so highly correlated to what's going on. The currency markets are in excess of $5 trillion worth of notional value transaction daily. And when all of these capital flows move around, they definitely move the stock markets. So, I think that when the Federal Reserve looks at the possibility of the dollar rising still further, that they're going to begin to freak out once we get at, for example, the dollar index, the DXY, hitting about 105. If we get that high, we're going to start hearing them doing their jawboning circuit in the media quite significantly, in my opinion. And by, the equivalent of dollar index 110, that's going to be a crisis level. If the policymakers are not able to control the rise of the dollar and we get that high, we're going to start seeing some major volatility translating throughout all financial markets, all of them.
Yeah, I agree. And we're starting to see this reflected, Eric, in the share prices of the bank stocks. We had a hedge fund manager. You posted this article on News Doctors. It was a short interview of former hedge fund manager, investment newsletter writer, co-founder of Real Vision TV, Raoul Pal, talk about how, the charts of bank stocks all look awful, and he thinks a lot of them are going to zero. So, that the bank stocks, the charts of them are reflecting that number one, hedge fund managers, a lot of astute ones, are short bank stocks. And number two, that, that they're reflecting that the crisis is a lot worse than the banks are letting on with the oil-related debt. Also, what I would add, too, and these are 2 points that, the market is not forward-looking enough yet, is that there's a lot of banks in commodity currency countries. These are not developing countries, but, like in Canada, Australia, there's banks holding bad base metal mining company loans and oil company debt and loans and natural gas loans that are going to go bad, and they don't have the cash to cover the loan loss reserves and things like that. So there's problems there. And the other thing is, Eric, once these oil loans start to go bad and the banks start writing them off, or they need a bailout or something like that, what I haven't seen many articles talking about this yet is that a lot of the developing world, so the Brazils, those types of countries, they leverage their government debt too, right, to the higher oil price and base metals and things like that. So there's going to be a domino effect where after these oil companies, if a lot of them do start going bankrupt and then the banks of holding the oil companies go bankrupt, the governments then in the developing countries could also start going bankrupt in the near future after that. Yeah,
it's a great point. And you can even look at how geopolitics enters the picture. Maybe Janet Yellen won't be thinking this, but, Barry Soetoro over in the White House would be possibly thinking about it. Saudi Arabia is now at the point where they're, having major problems from a financial point of view in terms of their budget, and the only way they keep their society together is basically buying off the population because they have a royal family of 10,000 or so members that sit on the top of the society as basically parasites. And, if Saudi Arabia falls apart, you end up having gigantic ramifications on a geopolitical front that, I don't need to spell that out for our listeners. And even something like that is tied into all of these conditions and considerations vis-a-vis the U.S. dollar. This is really in terms of potential energy stored for cataclysmic type chain reactions, we really got ourselves in a serious mess here.
Yeah, and there's an article on Zero Hedge about how a lot of people think that Wells Fargo is the one with the worst oil exposure, but Citibank has even more. So, we haven't seen the mid-level banks yet holding the energy debt in the United States, the Midwestern banks holding like shale debt, shale oil, or shale gas debt fail yet. But there's going to be a trigger effect, domino, counterparty risk, etc. But one sign, to add to your point there, one sign I think that we're seeing the emerging markets and oil countries in a lot of trouble is that their sovereign wealth funds are starting to rapidly dump stock.
Yeah.
So they're going to cash. And it's not because necessarily they want portfolio insurance. It's because they need to bring the cash home to protect their own countries and economies and things like that to prevent civil unrest, like you mentioned. Now, maybe in Norway, it's a Scandinavian country. I don't think there's going to be quite as much civil unrest as in Saudi Arabia.
But that's a great example, too, because the problem is so bad that even in the last 2 months, surprising many, Norway announced that they, are dipping into their sovereign wealth fund to cover their budget deficit because of the crash in oil.
Well, this is going to surprise some people. I just saw a new research report out a couple days ago, and IMF said, I think a month or two ago, that Saudi Arabia, on their projections, could be bankrupt in 5 years if oil prices didn't rise and if they didn't cut spending. But another research report says that the Saudis haven't cut expenses enough and the oil price if it stays at these levels or goes lower. They said Saudi Arabia will be bankrupt by 2018. So that's a lot less than 5 years from now.
Yeah. Yeah.
So, it's crazy things going on.
For context, I mean, it's important to note that original report came out almost a year ago. I remember talking about it with you, and back then, we were West Texas Intermediate equivalent in terms of general oil pricing, just as one benchmark, somewhere around $65. So we're a long way from where those days were, and markets do change. So that analysis back then was actually apropos. But now things have gotten a hell of a lot worse.
Yeah, so it's looking like oil is going to be the first, it's not first black swan, I guess, or the first domino to fall for the next financial crisis, the oil market, and then the banks are going to be related, and then after that, the emerging market.
And the other footnote, too, worth tossing out is most people spend a lot of time talking about the too big to fails, the banking behemoths that are damaged. But it might actually turn out that the systemic risk chain reaction that can, in fact, come from all of this sector decline in oil and made worse by the dollar could, in fact, be kind of like a piranha effect instead, where you have lots of the smaller regional, highly exposed smaller banks like, say, those in Texas, Oklahoma, or what have you, going down and then thereafter spinning the financial system into a tizzy. That scenario can happen as well too. It's not just the Deutsche banks that people need to pay attention to.
Well, all the bank stocks are down a lot. I mean, I did a video earlier today about different charts of the bank stocks. The XLF, which is the financial sector ETF, that thing is looking very poorly, the chart wise. And you go and look at Goldman Sachs and Morgan Stanley, those stocks are not doing well. I think that reflects the growing counterparty risk about the energy-related debt and other, counterparty things that are happening now too.
Absolutely.
So the market is becoming very skeptical about the job numbers. Obama was just on CNN today, talking about how low the unemployment rate is and how good the economy is and things like that. But one of the reasons car sales, Eric, are so good is there's 3 tranches now of subprime auto loan debt. So you have regular subprime debt. I guess you have now the equivalent of ninja loans and no-doc loans for our car loans now. So you have subprime auto loan debt with 2 levels of subprime, and then you have the lowest of the low, the bottom of the barrel, subprime auto loan debt. And these things are being chopped up, securitized, put in tranches, and sold again to sucker pension fund managers and other things like that. These pension fund managers at municipalities who are buying these things, some of these guys only manage the money as a part-time job. They don't even do it full-time. So they're getting suckered again by the Wall Street selling machine.
You just kind of sometimes have to step back and marvel at the product innovation of the financial services sector with everything being so derivatized and the sausage factory of securitized products, basically making the shadow banking system metastasize. I mean, this really is, in essence, the problem that we have. We no longer have financial markets that perform the function that they have historically been designed to do. I mean, they're gaming machines. They're casinos above and beyond all of their traditional roles, as well as this magnet for malinvestment. And it's, I don't know, like you said, we're in the end game process, and I think 2016 is going to see a big chunk of the end game unfold. It's going to be more than just a single year, but the end game process is going to take more than a single year to unfold, just like 2000 and 2007 or so. We had crashes that were in excess of 2 years in duration. But I don't see how we get out of 2016 without seeing a hell of a lot more pain.
Yeah, and one of my biggest worries is that, everything's going to be blamed on capitalism, and that's why we're seeing the growing support of Bernie Sanders, especially people in the middle class, people who graduated college, who have multiple degrees, they kind of think Sanders telling all the truth, but his solutions would only make things a lot worse. I mean, look at his tax plans for the middle class. They would drastically raise taxes. They would hurt the economy even more. They would be the equivalency, of what Herbert Hoover did with Smoot-Hawley and what FDR did with drastically raising taxes and stuff.
Yep.
How, the U.S. economy is stuck for a very, very long time in worsening economic conditions.
Yeah, I mean, he might get some bang for his buck by trying to introduce major fiscal policy initiatives. And at some point, I do expect that to happen, as we've talked about, regardless of who's president, because, policymakers, when they respond to crises, they tend to rotate in terms of how they respond with their, options and whatnot. So that's coming. Student loans probably will be forgiven to a greater or lesser extent as well, too.
Yeah, there's already large amounts of delinquencies on student loans. I actually saw an article, I forget where I saw it. It might have been on Vice, which is not normally a libertarian website, but they had an interesting article I saw on my Twitter feed. Mm-hmm. It was about, American college students or like people who came to the United States for college and they got a degree and then they couldn't pay the debt and they just left the country and the debt collectors can't find them. So
great.
But I want to talk about the petrodollar now, Eric. You have an article on your website on News Doctors about Russia accepting RMB for oil. Russia is one of the larger oil producers, so you think this is a very large cut then in the petrodollar?
Yeah, well, the interesting thing about this is that it's been a long time coming. I mean, this is not something that should be a surprise to anyone. The markets didn't react that much, and part of the reason why is, in fact, that it has been a process underway. And China consumes about 1 out of every 9 barrels of oil that are produced globally. And if you do the math in terms of what Russia's percentage of oil to China represents in that Chinese consumption, it works out to roughly about 1.93 or so million barrels per day, give or take. If my memory serves on the math I was doing on this earlier in the week. And, that less than a 1% percentage of the daily production of global petroleum is significant. I mean, we have something like 2 million barrels per day difference between supply and demand, and that's in large part a major factor behind why we are where we are right now. So, it's not a huge surprise that this kind of move is taken with a big, gigantic yawn among the people of the conventional financial world. I mean, the majority of the money managed in the Western financial world, I would say, is 95% managed by people that look at stories like this and are completely indifferent to it because they just don't understand that the long-term death march of dollar reserve status is happening. They just don't see it. It's happening too slow, and their normalcy bias prevents them from putting the dots together to see the big picture. So that's why you're not really seeing much of a reaction in the marketplace, other than maybe having a little bit of an extra tailwind coming to the precious metals sector this week as a result of this story. Coming as a tailwind, though, because the sector is moving on its own momentum and given all of the other fundamentals that are going on. But in the longer term, the dynamics of the petrodollar are going to interface with what we're describing in terms of the end game process. It's part of the story. It is a major component of the mechanisms that will, to see this financial market transition unfold. Yeah,
and the other part is that money managers on Wall Street, Eric, a lot of them don't even think 3 years out. So we have a situation now, and I'll give an example of this. I've spoken with some of the CNBC Fast Money guys on Twitter before, the ones that tout bank stocks all the time, and maybe they made a little bit of money on bank stocks. But almost all these articles now about bank stocks talking about from Barron's, now's the best time to buy bank stocks in 2 decades. Like, I think Barron's put out articles somewhat similar to that. The banks are so cheap. What they're not talking about is, the banks are allowed to legally use fraudulent accounting. So we don't know exactly how bad the bank losses are, and they're not going to tell us the truth. They're going to paint a rosy picture. I heard an interview with David Stockman on King World News, and he said he was on a panel talking about how bad the economy was on CNBC or Bloomberg or one of those in the last couple weeks. And he said, during the recording on live TV, they said they disagreed with him. The economy's doing well, you're wrong, you're a bear, right? And then he said off the air, they completely agreed with him, but said they, work for banks or they get paid big consulting dollars and they can't publicly agree with him on that because their bread is buttered on, you have to buy the bank stock, so the economy's doing well, blah, 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 blah.
Yeah, that happens.
Yeah, and the average money manager on Wall Street, for our listeners out there, they don't care. Most of them don't really care about the long term. They don't care 3, 5, 6 years out from now. They care about this week, this month, this quarter. If they don't beat their benchmarks for their returns and things like that, if they're for the hedge fund returns, if they're in a very, very competitive hedge fund sector, then people are going to pull their money. They're going to lose their paychecks. So they don't care about the really long term. And it's very unfortunate that everything's gotten that myopic and short-sighted, but unfortunately that's like the culture we live in now in a lot of aspects. The Pepsi commercial, "Live for Now," is very scary, when you're going to have drink all that soda because it's not very healthy.
Yeah, live for now. Gallons later, you'll be dead, so you better live.
Or type 2 diabetes, fatty liver disease, a bunch of other problems and things like that. But anyways, I want to talk about gold and silver markets now, Eric, because that looks to me to be probably the best performing sector there is right now in the market. We're seeing a lot of regular people, people who don't believe in gold and silver like you and me necessarily, but they're starting to move some of their money into gold and silver. I think those numbers are obvious with the U.S. Mint sales. We had Louis Camerasano. I had Louis Camerasano on a couple weeks ago for an interview talking about how the U.S. Mint sold more gold eagles, I think, in 1 month in this January than COMEX has registered. So we're seeing demand for the actual metal come out a lot stronger. But then on the supply side, look at the recent stories. We're seeing Endeavor Silver. They're announced that they're cutting by the end of this year silver production by 25%. They don't have a lot of debt on their balance sheet, so they're one of the few silver miners that is efficiently run, and they can't. They're not forced to produce because either they have a stream or royalty or they have debt. So they did the right thing, and they didn't want to produce silver at a loss, and they realized that one of their mines that they couldn't cut the cost fast enough, and they just said, we're going to put this mine on care and maintenance. I think we're going to see more of that in the near future. Yeah,
we are. And at the same time, the sector has, in my opinion, put in a pretty firm bottom. The powers that be were pressuring the precious metals basically from roughly the 5th trading day of January onward, and nonetheless, we're seeing them showing signs of breaking out, particularly in silver. You can see that we've had some significant signals from the mining shares. We have V-shaped bottoms in every single major silver producer throughout January, and now we've had a complete reversion and recapture of the loss of January. And now, silver spot basis today, as we record, this being February 5th, Friday, we went over 15 again. So despite the better wishes of the policymakers trying to spin all these plates up in the air, they're beginning to fall down, and now the precious metals are catching a bid, even when the dollar has had a bid as well. Yeah, throughout gold and silver aren't always negatively correlated to the dollar. There's been, as Jim Rogers points out accurately, there's been points in time where both the dollar and gold and silver are both risen. So they're not always anti-correlated to the dollar. In fact, so we'll just have to more common to see that in periods of extended manipulation, because it basically is a reflection of the fact that precious metals have been artificially held down, and the dollar is not quite as manipulated. So when things finally get so bad where forward supply in the mining sector is so damaged, where 20% forward supply, if not more in some cases, particularly silver, would come off the market, combined with, on the other side, all of the crazy stuff they do to manipulate the paper demand and shape perception within the sector, you end up getting these kind of shifts. And so, the dollar is going to probably rise as the deflationary flywheel we described and the credit solvency issues in the financial system and the shadow banking system continue to rot and bring down, the financial system worldwide. That pushes up the dollar. At the same time, gold and silver should also move higher. So we are in a window now where we would normally expect to see precious metals move higher with the dollar moving higher. That will be and interest rates even can conceivably move higher too if bond vigilantism returns, where people stop playing this bullshit game about, the Fed and all the other central bankers have my back. I'm going to ride the deflationary ride down. The counter trend or force to that thesis as a trader comes in when people begin to flip around and start fearing more questions of solvency and whether or not the powers that be can actually stem the tidal wave that'll wash over them. And I think that's where we're going to see precious metals move during the course of 2016. Doesn't matter whether the dollar rises. Doesn't matter whether, all these other traditional things that have been thrown at precious metals to keep things down. We're going to see them rise regardless because this larger percentage of the conventional financial community is waking up to the reality of a solvency crisis.
The other news stories from the mining sector of note out there for our listeners, there was the large base metal, copper, zinc, those guys, KGHM, I think they're out of Poland.
Yep.
They produce about 40 million ounces of silver byproduct a year. They're very angry over the manipulated silver price fix. So that's good that we're starting to see a miner who mines silver start to complain about the silver price fix and manipulation. I wish more of them would come out like Keith Neumeier, First Majestic Silver. We'll see if more mining CEOs, develop some bravery or some courage to go out there and do that. But I think it's good that at least, one other one at least said something. Even though they're not a primary silver producer, they do produce, I think, the world's largest amount of silver byproduct, because I think it's even more than Fresnio. It's at 40 million ounces a year of silver byproduct.
Yeah.
It's a very large amount.
Net basis, they're the largest silver producer worldwide. We should also tell listeners who may not have know the context of last week, we saw the London PM fix for the silver come in at I don't know what it was, 80 cents below the spot price. I mean, just like you can drive a truck through the huge hole, and they did that right before the settlement of derivative positions. They were trying to make sure that somebody somewhere who was exposed and probably having something that could conceivably do some significant damage to their balance sheet, with financial trading institution or whatever, they were stuck, and that was a really stinky move. I mean, nothing, to the best of my knowledge, of that magnitude has ever been done when it came to the discrepancy of the silver fix, or the gold fix for that matter, over 117 years or something that these things have been up and running. So it's another example of just how insane things are, and how the lack of a rule of law or adherence to regulatory considerations mean nothing these days. They just everything is so screwed up that bankers are willing to do crazy-ass things to try to fix problems on a day-to-day basis as they extend and pretend even in their own portfolios.
It's not just the banks cheating and changing the rules, Eric. Another story from the mining industry is the government's changing the rules. And this goes back to my whole concept. If you read our report, the report I put out recently, reviewing 2015, previewing 2016, and also other articles and videos I've done about this, it goes back to rule number one. Politicians are going to change the rules. They're going to move the goalposts. Yeah. They're going to change the targets. Lucy's going to pull the football on Charlie Brown after he started to kick it. Or, after the field goal's already up in the air, it's Super Bowl Sunday coming up. After the ball's already up in the air, it's been kicked, they're going to move the goalpost while the ball's in the air and move it, 20 feet to the right. So this is one of the examples of this going on right now. The Mexican government's going after Primero Mining for tax, lack of taxes, and the Canadian saying that they didn't pay enough taxes, and the Canadian government is going after Silver Wheaton, which is the large silver streamer, saying that they didn't pay enough taxes either. Well, Silver Wheaton set up legal offshore corporations. They had some of the best lawyers in the world look at offshore vehicles and things like that, set them up. They were perfectly legal at the time, but this is a situation where, ex post facto, these governments in these countries, with resource prices down and their currencies weak, they're not bringing in enough tax revenues. It's time to change the rules, Eric. It's time to go get more money. We're all just little cows that can be milked, especially with a mine, because you can't move a mine. So if a mine is in a country, right, the mine is like the easiest target for the politicians especially in developing countries, to change the rules on and say, you know what, we're not making enough tax revenue. You guys need to pay more taxes now.
A lot of those mines are no longer fat milk cows; they're emaciated little runts. The government is chasing. Look at what has happened within the energy sector in Alberta. I mean, a year ago, the turnover roughly, I don't remember exactly, but they had elections, and the new government was interested in taxing the energy sector far more. And now the energy sector has crashed, and the damage that's being wrought in Alberta is just mind-boggling.
Oh, yeah. I have a few friends who worked up there. I'm not sure if they still work up there, but they were telling me, they were firing people left and right, tens of thousands of people. It's very sad that so many people losing their jobs. Well, it doesn't confuse me because I know the truth, but, the Obama going on there on TV and the Federal Reserve economists and the Wall Street guys going on there saying how good the economy is, almost all the full-time jobs that were created, Eric, since 2008, most of the net ones were energy jobs, right. The shale oil full-time jobs or the service sector jobs in those towns. In North Dakota, in Texas, and Oklahoma, they were all related to, the hard work of producing shale oil and shale gas. And, those jobs are they've already been lost. We're seeing enormous job cuts there, and the jobs numbers are not reflecting this in the United States.
Yeah.
Okay, well, we have our Scumbag of the Week section. We have one major nominee so far. I'm going to read right now, and then I'm going to go on Against Crony Capitalism's website and see if I can find a couple more. Eric, if you want to make some additional nominees, you're welcome to. But our first one that we discussed before the show that we both agreed on is T. Boone Pickens. I really respect T. Boone, at least in the past. The guy was a self-made billionaire, worked very hard, entrepreneurial, took a lot of risks. Put a lot of his own money at risk in the market, in his own oil companies. He wasn't always right, but he recovered when he was wrong. And, he had a reputation for being a great oil man. And recently this week, Eric, he did something that I think is one of the most egregious examples of hypocrisy I've ever seen. He was talking, I think, last week or early this week about how the oil price is going to double by the end of this year. And then he was on another news channel a couple days later and said after the oil had a little tiny brief rally in 9-10% or something, he sold all of his oil positions. Yeah. So it's just total hypocrisy. I'm not sure if it's, it's obviously unethical, but I'm not sure it's illegal.
Yeah, I don't think I didn't watch the interview, so I can't really comment on the legality issue. But generally speaking, that falls under First Amendment right, and he's just expressing his opinions and so forth, even though he's essentially going way more than just simple talking of one's book. But it's kind of sad to see. He was willing to say things at times in our past that a lot of other people in the energy industry weren't willing to talk about, particularly 2003, 4, 5, 6, he was very vocal about peak oil, and a lot of people took a lot of flack for that. And the reality is that peak oil is real. The people who say that it's not real don't understand what, in fact, the geology and fluid hydrology and the hydraulics of oil fields and so forth. I mean, it's a phenomenon. It's real. The shale boom and crash is, in fact, something that just masked what is going on in the bigger picture when it comes to ever more difficult and lower quality, generally speaking, reserves because of the fact that the easier stuff has been already accessed. So, it was laudable that T. Boone Pickens was one of the people that actually would speak truth to power back then. And also, he's a pretty decent guy, like you were talking about when it came to being a textbook example of somebody working hard and being an entrepreneur and being a great success. But talk about a fall from grace. I mean, I'd really have to see the video to see the degree to which he may have stepped into something more when it comes to legal issues. But from a reputation point of view,
could get him for pump and I don't know if it's technically pump and dump since he didn't sell securities. He's not a security salesman, but it's highly questionable. It's kind of in the gray area.
Yeah. You and I were joking before we started recording about how he's getting up in years and maybe he just doesn't care about his reputation anymore, and he was trying to salvage his portfolio. Who knows?
Well, I think oil and gas are going to come back eventually because, after the Federal Reserve and the Wall Street Bank stop bailing out the shale producers and giving them more and more credit just to buy themselves another month or a couple more months, we are going to have bankruptcies, and then supply is going to come offline. Petrobras in Brazil is probably going to go bankrupt. A good amount of supply will come offline from them. So we are going to have bankruptcies, but we're not going to have a recovery, probably a real recovery in the oil market until we see those bankruptcies, until we see that supply come offline.
Yeah.
Then that'll eliminate the supply glut very quickly.
Yeah, it's like what Robert Rapier said the other day when you were interviewing him. I mean, if somebody were to take out a 5-year lead position on West Texas Intermediate, it's pretty hard to imagine not making money on that. I mean, at some point, the sector will turn around, and it's probably, in fact, like T. Boone said, probably going to turn around this year. Maybe not double. I doubt that. But, other than the scenario of the deflationary process getting completely out of hand and having, financial market crash, oil probably has largely reflected the fullest extent of the pain going on, other than maybe going back down into the low 20s or something when we later this year have more periods of extended volatility to the downside in financial markets overall.
I also think, Eric, that there could be a new oil cartel formed out of OPEC's ashes, because OPEC, the producers in OPEC don't listen. When one wants a cut or one wants a meeting, They don't agree to it. They can't agree to anything anymore. So I think maybe there'll be a new oil cartel formed with like Russia, Saudi Arabia. They'll name it something else and they'll start over from scratch with it. Because I think at some point they're going to have to cut supply just to move the price higher so they don't go bankrupt quickly themselves.
Yeah, that's a possibility. And in fact, the kind of things that may happen include Saudi Arabia being overthrown, Saudi Arabia falling apart internally due to ISIL, things from a geopolitical layer on top of the financial markets perspective are just so fluid right now that you literally could, in fact, see changes that would blow people's minds. I'm looking pretty closely at what's going on with Saudi Arabia, and I'll be writing about this in the coming months. What's going on there right now could involve things along the lines of the United States coming out and, for example, blaming Saudi Arabia for 9/11. We have the 28 somewhere under 23 pages, excuse me, my memory fails, of the 9/11 Commission report that have been classified all of this time. And frankly, I think that all of the talk about that 28 pages over the years has been a kind of limited hangout / off-the-shelf at-the-ready strategy to be able to dump on Saudi Arabia. And now that we have this transition with the king having passed away and his brother in power, and his brother is kind of, he's senile and his health is failing, and his son has been installed by this king. And the traditional line of succession in Saudi Arabia involves brother-to-brother passing. And we have a turf battle within the royal family on top of all of the instability within Saudi Arabia that's being caused by their funding of ISIL attacking Syria. And ISIL is turning around and now attacking Saudi Arabia. When I talked about this all the way 18 months ago when the very first story came out about ISIL terrorists crossing the border, and there were only like 4 of them or whatever. But, this story was covered by the Wall Street Journal, the News Doctors, Yahoo, and no other news media in the entire Western world. The Western world is in complete denial about what's going on in Saudi Arabia, frankly. And then, that's the policymakers are in the background considering some contingencies that are going to change everything. And when you speak about the possibility of an oil cartel shift where China and possibly Russia and Iran and direct participation with Saudi Arabia, as opposed to the current general way in which the Middle East is structured and the Anglo-American empire has such an enormous influence on the petrodollar system, on and on and on. I mean, we're talking about shifts that literally change the trajectory of empires, shifts on the scale of, the British Empire where the sun never set suddenly finds the sun setting on the British Empire. That's the scale of magnitude of the possible changes that we're talking about when it comes to the possibility of a new oil cartel forming. And that would take time, actually. I think a more appropriate way of describing it would be kind of like a loose coalition, so to speak, or changes in business partnerships and relationships. You know, I mean, China in particular loves to go around all over the world and strike up business relationships as opposed to trying to manage its sphere of influence by creating chaos. Pepe Escobar, the great journalist, describes the United States and its empire as the empire of chaos, because order out of chaos is in fact how the United States at this point is provision and control over what little power or what remaining power we have.
Well said, Eric. Well, the last couple nominees, the last couple stories for Scumbag and the nominee, and unfortunately, stories are still from the same person. She won Scumbag of the Year, our Scumbag of the Year for 2015, Hillary Clinton. So the health insurance drug lobbyists continue to give her a lot of money. She denies that they're giving her any money. This is just getting ridiculous. Her level of hypocrisy. I'm starting to see more people talk on Twitter about how much of a hypocrite she is, but it's not really coming out of Hollywood people types in the mainstream media. It's like the regular people on Main Street totally fed up with her. The other thing is the Planned Parenthood. You know, they give her a six-figure donation for an ad buy in Iowa, and then Planned Parenthood then gets a $20 million, she's going to get $20 million more to support her. I thought she was going to give them $20 million of additional funding. Well, I guess it's just pay to play as normal. With a government agency, so in the political process, it shouldn't be there in the political process, but I guess clearly, they want Hillary involved. But yeah, there's lots of great stories on against crony capitalism. It's one of the better stories for finding political corruption and crony capitalism and Scumbag of the Week nominees. I really like that website. They do a good job finding, sad but also funny stories on there.
Last time we talked about Hillary was before the Iowa primary, and she eked out a gain and won the Iowa primary. But what's interesting about that story is that Bernie Sanders, for the last couple of months, has been gaining on her. And he actually performed pretty well in the Iowa primary, and it's scaring a lot of people in the establishment, quite frankly. I think the Democratic Democratic Party establishment is nervous.
Well, there's actually an article on that here on Against Crony Capitalism, too. It says, luck before a lady last night. Hillary Clinton has the most statistically improbable coin toss luck ever.
Yeah.
Sounds like a rigged coin toss to me.
Somebody slipped in a good coin for Hillary. The other thing, too, that's fascinating is that, we've got these ongoing revelations, particularly the ones tied to the end of December State Department mail dump of Hillary Clinton's email server that, they basically are responding to Freedom of Information Act requests and so forth. And amongst other things that came out of there was 20 some odd special access projects and top secret classified email communications that essentially boil down to Hillary Clinton being caught with red-handed committing treason. These are felony level transgressions on her part, and there's no way at this stage that it can be dodged other than by a clear-cut decision from the establishment to not make an issue out of it. And that would take the form of, for example, Obama talking to his attorney general and saying, you sit on the FBI, tell the FBI to back off.
Okay. I've got her excuses. There was a great tweet by this guy's a satirical Twitter handle, White House Press Secretary. Here, it's called The Evolution of a Lie from Hillary Clinton, and it lists all of her excuses and how they've changed for this. The first excuse was just yoga wedding emails. Then it evolved into none were classified. Then it became none were marked classified. Then it's just overclassification. Then the last one is it's a GOP plot.
Yeah, it's always the grand right-wing conspiracy. It's the final excuse.
Oh, she's made that right-wing conspiracy excuse a lot of times for her husband and for herself.
Yeah, that goes back to the early 90s when she was doing the poster child stuff for her insurance health plan revisions and basically proposing a national health care system. And people went berserk back then, and, her war against Rush Limbaugh, et cetera, was the vast right-wing conspiracy. But it's really ironic because one of our earlier the Welcome to Dystopia discussions we had was Mike saying that I can't imagine how Hillary can get away from all of these scandals because they're going to keep getting worse. And I was aware of the degree to which these classified emails were, on her server. Given the kind of subjects that were discussed, it was clear that they had these kind of magnitude of infractions on her computer. And it's unfortunately going to boil down to something along the lines of the powers that be basically fearing Bernie Sanders so badly that they'll put up with Hillary. And if she were to become president, they have basically, in intelligence parlance, they have a much more powerful control file on Hillary Clinton now because she has been outed as having committed felonies. And in terms of just a generic analysis of what happened, though, we're not in a court of law, we don't have all the evidence, and we don't have all of the intelligence that the NSA and the other groups have on Hillary, there's no way that there's any ambiguity here in terms of the magnitude of the infraction. She had these emails on her server. She therefore broke the law, and it's really that black and white. And whether or not she gets prosecuted or not is a completely open question as to how the establishment deals with this. But if she were to be president and sit in her butt in the Oval Office, people in the oligarchical strata of our society that basically, are the special interests that control the way our government moves will, in one way of looking at it, have the consolation prize and the tolerance to accept that, a Hillary presidency because they will have better strings attached to her as puppet masters. She'll be more
obedient than normal? Is that the point that you want to? That's because they have more dirt on her, she'll be more obedient than she would have been.
Exactly. That's how politics is played in Washington. Control files are, in fact, one of the toolkits that anyone who's at the level that she's at plays politics in this regard.
The other thing I would add, Eric, and that's definitely part of it, the other thing I would add, that having lived outside of D.C. for about over 15 years now on and off, is the bureaucracy component. So you have some good, hardworking, honest investigators in the Department of Justice, in the FBI, getting the dirt on Hillary, running their investigation, but you have in these organizations, you have people, normally they're women, who view Hillary as a hero, people who support Hillary blocking them. So you have a situation where the good investigators do the job, find that Hillary committed all these additional felonies and things like that, and then they move the evidence with the case up the chain, and somewhere in the chain, either the middle or the higher-ups, maybe there's people in both, there's someone who's loved Hillary Clinton her whole life and views her as a role model. She's a female lawyer. Hillary Clinton's a female lawyer. She wants to see a woman president in her lifetime. There is an enormous amount of these types in Washington, D.C. That's not it's something that only someone who's lived in D.C. and knows some of these people that understands exactly what's going on, that there's a lot of bureaucrats. So all of this could be stuck up, Eric, on a handful of bureaucrats in one or both of these agencies that love Hillary, even though the evidence is overwhelming, blocking this stuff. Yeah. So that's how cumbersome and expensive and power these bureaucrats have, that they'll figure, they'll just wait it out till the Congress becomes Democratic or something like that, and then she'll get pardoned or something like that. So this is how messed up and large the bureaucracy can do and how it prevents justice.
And that's not even an analysis that can be poo-pooed as, you being ideological or partisan or whatever, because academically, anyone who has looked into organizational theory, for example, or, social science in general, you can see that, in fact, this is just a part and parcel of what happens in governments and then organizations. The higher you go, the more corruption you experience. And our system has such levels of corruption, it's just unbelievable. And the lack of rule of law and the overuse of regulation for political purposes and on and on. This is Eric.
This is why the founding fathers didn't want big government. They didn't want a bureaucracy. They wanted congressmen to not be full-time legislatures and congressmen. They wanted them to stay at home and only do their job part-time and not collect a big salary. They knew that if there was a big bureaucracy, stuff like this would happen, where, the investigators, obviously there's a mountain of evidence that proves she did this stuff, or it would be good odds in a court case that she would probably be guilty or have to do a deal or resign from the election or something like that. But, we're in a situation now where even if they collect all the evidence, there's a couple people in the bureaucracy now that they can't kill it. So this is the world that we live in. If you're not familiar with how politics works, or you haven't been around D.C. or your state capital as much, maybe if you're in a smaller state, the politics aren't quite as bad.
Yeah.
But in larger states with like Illinois, New York, California, New Jersey, the politics in these states are very similar to how things go down in D.C. Sometimes they're even worse. But if Ted Cruz, who won the Iowa caucus, if he wins the Republican nomination, Eric, and Hillary wins, those are two, candidates that are both going to be controlled by Wall Street. Hillary's accepting enormous donations from the financial industry and Goldman Sachs, and Ted Cruz's wife is a managing director at Goldman Sachs. So, we're going to be, the more things change, the more they stay the same, unfortunately, if Trump doesn't win the nomination.
And Ted Cruz, though he is, someone who pays a decent amount of lip service to constitutional heritage of the United States and sticking up for constitutional rights and so forth, he is a neocon when it comes to international relations policy. And the bottom line is that the Republican Party has a massive problem understanding the basic fact that one cannot have an empire and at the same time have a constitutional republic. So, people think of Ted Cruz as like some ambassador to the Tea Party, and I think that that's specious.
He's trying to pick up votes, though, like aligning himself, because he's mentioned a gold standard a couple times. There's no way. I don't think he would go back on a gold standard unless, the markets force him to. But, yeah, I think he's trying to pick off Tea Party votes and libertarian votes. He's clearly trying to steal some of those votes.
And at the same time, you have the Republican establishment attempting to steer people away from Trump and towards Cruz because Trump scares the crap out of them. He's an enigma. He's not 100% controllable. The control file conversation is relevant here, too. I mean, Trump is very independent in his own way, and he's independently wealthy, and so he's kind of like a loose cannon. And the thing that we can all agree about when it comes to analyzing who and what Trump is, there's one thing I think that everybody can agree about. The thing that Trump cares the most about in his life is Trump. He's got an ego.
He's changing a new wife every couple
years. Yeah, okay. Well, I mean, is that not but servicing the
younger Eastern European model?
Yeah, there you go. I mean, that is an example of Trump being all about Trump. And the fact that he's got this kind of core motivating, heartbeat of unpredictability. It scares people in the establishment. And it's similar to Bernie Sanders, although Bernie Sanders is actually more definable as a threat because initially they put him out, frankly, in my opinion. Can't prove any of this, but I think they put him out just as kind of like a part of the kabuki theater of our elections is all about, releasing the steam valve pressure of discontentment of the society. And when Bernie was on the scene initially, it was very much a way of kind of like releasing the pressure that disaffected people have. And then similar role was not by his design, but just by default because of the way in which things evolved in our system. Rand Paul played a similar role for Republicans. And, now it's kind of funny to see that, as our economy is rolling over, people are getting more pissed off by the month. Bernie is picking up more votes, and Hillary's falling apart from her own self-implosion. And Trump on the other side of the fence is still probably going to continue to roll forward. And frankly, I think the bottom line is that it's hard to say because I'm wondering to this extent to which the powers that be are afraid of Trump. But I think the bottom line is he's going to win because that's where the trends are. We have this disaffected populism that's on the rise, and push comes to shove, the elite would certainly prefer a Trump versus a Bernie Sanders. Would you not agree?
Yeah, I think the corporations would prefer Trump. There's a lot of business people that used to be Democrats, like the guy Steve Wynn, who used to be a lifelong rich Democrat, limousine liberal, and I think he supports Trump. So there's a lot of people on Wall Street that are kind of fed up with things in the Republican Party, and also business leaders that would prefer Trump to Bernie Sanders.
Yeah.
But I really don't know. There's so many people, Eric, who prefer socialism now that, Bernie is very popular. I've gotten in arguments with very book smart people, but who have no common sense, who have multiple degrees, who think that Bernie Sanders can save the country, that he's the only honest politician. Well, yeah, he'll destroy the economy further, as bad or worse than FDR did for a very long time. And FDR didn't create the recovery and all this. That's nonsense that the government-sponsored history book said. But we're at an hour here on the show, Eric, and we tried to stay under an hour. So I want to just wrap it up now. I want to thank our listeners for listening to episode number 15 of Welcome to Dystopia. We're going to keep putting out new episodes once every 2 weeks. That's the goal, to get them out. And, if you have physical metal, gold and silver, if you have the mining shares, you've been long suffering for a while, if you were hoping for gains in price, but it looks like the bottom we're starting to get a nice bottom, and, money's starting to go back into the sector again.
Yeah, if you're looking for some serious returns, I mean, gold and silver have already been the leading performers this year. Gold, I think it's 7% up this year to date, and silver 8%. Memory serves.
Oh yeah, and the mining shares are doing even better. A few of the stocks that were in our value section from the report, their free report we gave out, like Royal Gold, that was up 12% in one day earlier this week. So and it's been up a lot this week too on other days.
Yeah.
So people are already starting to get nice returns. Those are quality companies with earnings. Royal Gold is a very large gold royalty and streaming company with a dividend. So there's opportunities there still in the gold and silver markets. Obviously a lot of these juniors are not going to get funding right now. So I would avoid most of those. People are looking for lottery tickets. That's not the way I would do. I would buy quality companies that will survive this, that don't have horrible balance sheets. But thanks again for listening to this episode. Have a good weekend and enjoy the Super Bowl.